Good morning, everybody. This is Max from Trades and Gains. I'm going to break down our CPI report today because that shit just dropped and it is hot. Inflation came in at 0.5% for January, way above market expectations, pushing the annual rate to 3%. Markets are reacting fast already, and Dow futures are down 400 points. Bond yields are climbing, and everyone's wondering what the hell is going to happen next. Let's break it all down. What's driving inflation, how the Fed might react, and what you should do next. Let's stay locked in, folks. So to kick things off, let's talk numbers. The CPI report for January of 2025, headline CPI month over month, was 0.5% versus 0.3% expected. Headline CPI year over year was 3% versus 2.9% expected. Core CPI month over month was up 0.4% versus 0.3% expected, and core CPI year over year was up 3.3% versus 3.1% expected. Translation, inflation is sticky and the Fed is watching. Okay, let's talk about the biggest culprits driving the CPI surge though. Shelter costs are still climbing with a 0.4% increase month over month and a 4.4% increase year over year, and 30% of total CPI increase was housing remaining a major driver. Food prices are jumping again, an increase of 0.4% month over month, and eggs are up 15.2% due to avian flu. Energy prices are back up, gasoline's up 1.8%, natural gas up 1.8%, and the used cars are making a comeback, up 2.2% month over month, reversing a previous decline, baby. Bottom line, inflation isn't cooling as fast as we thought. So what's the Fed thinking after this hot print? Powell just testified this week and said no rush on rate cuts. The CPI report confirms this stance. Market expectations for March rate cut, dead in the water. Forget about it. June rate cuts odds are also, for the record, dropping faster than a stripper's panties. The Fed needs more data before cutting rates. This report makes their job harder. So how are the markets reacting? The stock market, Dow futures down 400 points. The S&P and NASDAQ are also down. Tech stocks are struggling. Higher rates hurt growth. Bond yields, the 10-year bond is up, and bond pricing in higher for longer. Rate cuts getting pushed further out. Crypto and gold. Gold is holding up at record levels, inflation hedge, and crypto is mixed. Uncertainty keeping it volatile and interesting for all of us over here. Short-term volatility is here. Expect wild moves in stocks, bonds, and crypto today. So how do you navigate this market? This is the way I'm looking at it. Short-term, stay defensive. Focus on commodities, gold, and defensive stocks. Watch for buying dip in strong tech names, and keep an eye on Fed statements and market expectations for cuts. Our long-term perspective, if inflation stays sticky, expect higher for longer rates. If we see a cool down in the upcoming reports, rate cut expectations will come back. Our final thought here is inflation is still here, folks, and the Fed isn't ready to pivot. So stay smart and stay informed. And that is your CPI breakdown. If you found this helpful, drop a like and a comment. How do you see inflation playing out this year, folks? Subscribe for more real-time market updates and trade strategies. I'll see you in the next one, and stay sharp, stay diligent. Market opens in 10 minutes.